On the eve of the 2010 general election, the North East Shadow Monetary Policy Committee, in conjunction with the North East Chamber of Commerce, the Northern Echo and Arlington Financial, met to discuss interest rates. They decided that the interest rates should remain the same at 0.5%.
The meeting was a really interesting meeting, and I think what characterised it was really a conversation about how uncertain things are. An election happening shortly, but also we have the wider conversation as to what the economy is doing at the moment, and there's still an awful lot of uncertainty, and I think that was reflected in the room. So as a consequence, it was a unanimous decision to hold rates at 0.5%.
We were unanimous in our view that we should hold rates, and I don't think there's any option. Until the banks start to lend money again, there's no chance that the economy is starting to move. It's the key to all sorts of property transactions, it's the key to enterprise, start-up, and we don't want to go back to those dangerous days of irresponsible lending, but where you've got copper bottom cast iron guaranteed income to support lending, you've got the security in terms of the property to charge to the banks. I think the banks are being totally unrealistic and they're keeping their money, they're not wanting to lend it, and as taxpayers we've bailed the banks out, and I think it's about time that we had a little bit of payback for the investment that we have made in keeping the banks on track.
I voted for interest rates to be kept as they are today. I think there is still a need for further activity to be supported in the market. So I'd like to see there being more activity from first-time buyers and all of the spending that comes as a result of house purchase, and seeing that coming through before we have any increase in rates.
I voted to hold the base rate at 0.5% because although the inflation figures do look slightly high, I think that's merely a reflection of some of the government's changes in taxes coming back online, and I think we need to see at least another 2 quarters results of high above 2% inflation before we start worrying about increasing bank rates any further.